With headlines hitting us almost on a daily basis of developers clocking record sales and most experts predicting home prices to rise, we decided it's time to decode India's housing market area by area. So, today on the Property Show, we begin our market watch with Gurugram, an investor's darling in the city where hype seems to have returned the fastest. Do numbers corroborate this upbeat mood? Aakash Ohri from DLF Limited and Samir Jasuja, PropEquity, will decode the data to tell us what lies ahead. Also on the show, the World Environment Day celebrated on 5th June is a reminder to each one of us for reducing our carbon footprint. Today, we bring you face-to-face with Anubhav Gupta, Godrej Properties, On Abdullah, Lodha Group and Manit Rastogi from Morphogenesis to get to one pressing answer. How do we make India's residential or housing sector sustainable and green? Gurgaon's housing market first with Aakash Ohri, Senior Executive Director, DLF Home Developers, and Samir Jasuja, Founder and CEO of PropEquity. Aakash, obviously the first question is going to come your way. Now, there was a recent, of course, press release of your annual numbers, 24% jump in residential sales bookings in the financial year ending March 2022. My question to you is, this booking of 3,084 crore that you saw last year, has it crossed the peak of sales that DLF has ever registered, or is there some distance to cover on that?
Thanks for having us on the show. No, so as far as the peak is concerned, I feel that to Gurgaon, like you rightly said, is also a melting pot, and you have people from all over the world wanting to invest in Gurgaon. The infrastructure is gotten so better. The communities are very vibrant, and therefore most of the multinational offices operate out of Gurgaon. Leisure facilities, got the best golf club and so on and so forth. So I feel that this is only the beginning of a lot of good things. It's already proved itself in the past. And this year's we've clocked in about over 7,000 crores of sales, and that is from both residual and new launches.
All right, Samir. So probably not the peak. And if I look at your data as well, 2021, not just developers like DLF, but if I take the whole ecosystem, 22,000 was the number which Gurgaon recorded as sales of units. This includes apartments and villas and of course independent floors. This is still 50% lower than the peak of 2015, which was at 33,000 sales numbers. So are we celebrating too fast?
No, Manisha, I think the reason behind 2015 was that there were a lot more developers in the market, and with the consolidation of developers, this number, which is when we talk about 2022, we've already hit 9,600 units in the first 4 months. So that is, if you analyze that number, that will go up to 27,000, 28,000 units, which is the second highest in the last 10 years. So I think Gurgaon real estate is back with a big bang in a big way, and this time what is very good to see is that the demand is coming from all sectors, whether it's affordable, mid or luxury. All the three verticals have done well, and there have been limited number of launches compared to what used to happen way back when the peak was there, because when you have higher number of new launches, then the sales also go higher. So with limited launches, sales numbers touching so high is a very pleasant surprise. And I can say Gurgaon is one of the fastest growing markets with respect to absorption in percentage terms.
Okay. And interestingly, I saw the data and I'm going to just read out for our viewers the top selling markets of Gurugram and how the numbers are looking. So Golf Course Road Extension in 2018, the total sales was 600 units. That's climbed up to 2,200 in 2021. Dwarka Expressway was 3,000 units in 2018, gone up to 6,400 units. New Gurugram, which is another fast selling market and in demand, 1,200 units. That's up to 8,100 units in 2021. Southern Peripheral Road, or SPR as it's popularly known, was at 600 units and is now at 2,300 units. So that's a huge jump if I see for these four most popular markets. There have been some markets like Sohna and Sona Road where actually sales have come down between 2018 and 2021 as per PropEquity data. But that could also be because the launches have been almost nil in these two markets. Aakash, I've heard, DLF speaking around their quarter numbers and talking about the fact that for even something like independent floors, in 6 months, you were able to raise prices as much as 30%. But that came on the back of very flat prices for a long, long time. Now, of course, interest rate cycle has turned around. HDFC has raised interest rates or started raising, and other banks are going to follow. Where do you see pricing power landing? How much will you be able to increase prices in this year?
So you're right, prices were flat earlier. But if you've seen the way we've gone about doing our business, the floors this last 1 year, we've done about almost 2.7 million, about over 1,000 units, and worth about almost 2,600 crores. So obviously, the floors which have been picked up and which are doing well because a lot of investments are now coming in from end users. They've been able to take the prices up, as you know, and over the last 15 months, the prices have gone up by, I can safely tell you today, in some of these areas, they've gone up by about 40 to 50%. So obviously investors have done well, they've made their money, but this is they are not yet trading. We are going to hit, with the interest rates going up and all, there will be a certain amount of, I feel, a little bit of a pushback. But these are, the good part is almost 70 to 80% of these sales are for people who are buying for themselves. And when you do that, then irrespective of your interest rate increase, which you saw earlier as well, I don't think that's going to be a major detriment.
Okay. So Samir, do you agree with Aakash that developers do have the room to increase prices despite the fact that interest rate cycle has turned? I'm looking at some of the data from you. So the peak that we saw on the weighted average price of Gurugram market was in 2014 at about 8,300 rupees per square feet. Today, if I look at resale and new stock weighted average price of this entire micro market, it's at 7,900 rupees per square feet. So yes, it's recovered from its lows, but it's still away from its peak. Where do prices head from here, looking at what inventory exists and the new launches and pricing power the developers have?
So the market will have to be divided into two parts. One is the reputed developers, brands like DLF, and those developers will be able to command a premium because of their deliveries, execution capabilities, and quality apartments or independent floors that they offer without compromising on anything. Those projects will keep on commanding a premium and will continue to rise, especially in the independent floor segment also, because the plots have doubled in price. This is very important to know in Gurgaon. Plotted development has gone up across the board by about 70 to 80%, if not more. Secondly, the unbranded players and the smaller players are working on the Deen Dayal Awas Yojana scheme, which is more affordable in nature. There have been more affordable homes that have been launched under that scheme, and they have sold exceptionally well. That's what has kept the weighted average price lower. And keep in mind one more fact, that Dwarka Expressway and New Gurgaon are markets which have done the best. And there the prices are much lower than the overall Gurgaon markets. Prices in Dwarka Expressway were around 4,000 to 6,000 rupees a square feet. They reached up to 7,000 to 8,000 rupees a square foot. And so has the same happened in New Gurgaon as well. So prices have gone up. It's not showing on the weighted average price scale because...
And where are they headed, Samir? Where are they headed? So my question is, how much more pricing power is left? Because we read news which says, oh my God, next 5 years are going to be phenomenal. Buy your house today because prices are likely to now gallop from here on. Is that going to happen, or is it going to be a modest increase, inflation plus 1 or 2%?
No, I think it's going to be a much larger increase because cost of construction has also gone up. Branded players have had financial closure with their projects, so they can easily raise prices. And the markets are maturing, and they have not appreciated for the last 5-6 years, so they're doing a catch up as well. So keeping all that in mind, I think, like I said, it's divided into two parts. Certain players will be able to relaunch the pricing, the power that they have at a much higher rate. And there'll be other players which will play the affordable market game, and the pricing is going to be stable. So it's really divided into two parts.
Well, Samir, by the looks of it, I think we were more than 150 developers at one point of time in Gurugram, and now there are less than 30 developers left. So the market is already consolidated between some of the good players. Aakash and Samir, thank you very much for decoding that data for us and giving us an insight of what's happening in the Gurugram real estate market.
Thank you.
When we return, why does India's residential sector lag in best green and sustainable practices vis-a-vis its cousin, which is commercial sector? And how do we bridge this gap? The World Environment Day on 5th June makes it a perfect time to raise these important questions.